Yes, the trend is your friend. If you've been trading for any time at all, I'm sure you're familiar with that expression. Easy to remember sayings are all well and good, but do they really help you to trade the market? Well, I believe it actually can help you trade the market, but only if you're really paying attention. Are you really trading with the trend, or do you just think you're trading with the trend? Also, what if there's no trend in place at all? You have to be able to identify when those flat markets are occurring and decide if you want to try to scalp those flat markets, do a little range trading, or if you only want to trade during a trending market where it'll be easier to make bigger profits. One of the first things I teach with my Forex training company is trading looking at more than one time frame. So what we do is we always look at least two time frames. We have a larger time frame that gives us the long-term picture. That's going to show us the direction of the current trend. To us, that's the direction of the current trend, and we can only trade in that direction. Next, we have an intermediate time frame, and we may only have two, the long and the intermediate. The intermediate is where we're going to look for signals. So we're looking for signals to occur on the intermediate time frame that agree with the long-term time frame. Now, at times we also use a short-term time frame to pinpoint our trades. Since many traders like myself only want to trade certain times, so I trade the US market. Some traders may want to trade only the London session, depending on what area of the world they're located. So in order to find the very best entries, sometimes we have to come down and look at the short-term frame. But we're not just day trading, we're trading in the direction of the long-term trend. So myself personally, I really prefer the 4-hour candles, or the 4-hour time frame. I love to trade off the 4-hour time frame. But right now I'm looking at a 15-minute chart. So today, June 16th, 2008, I realized, looking at my charts, that the euro was making a move long again against the dollar. So I'll show you how I can trade the 4-hour time frame essentially while looking at a 15-minute time frame. I want you to take a look at this main chart area here, and I'm going to switch to a template that has an extra indicator on it here. And if you see these different colored boxes on my main chart area, each one of these boxes represents a 4-hour candle. So the outside colored part of the box, see the blue and the green, they represent the high and low of the 4-hour candle. The gray shaded in areas represent the open and close of the candle. So if it's a darker shade of gray, the candle closed lower than it opened. And if it's a light shade of gray, the candle closed higher than it opened. So if we had been trading the London session today, we could have gotten a great entry here trading the break of this 4-hour candle. Right here, where the arrow is pointed, we knew already that we should be looking long, and I'll show you why in a minute. So we could have taken the break of that candle, traded that. So we could have gotten in right around 1.5420 and ridden it up. Right now we're at 54.78, so not a bad little profit right there. We were just holding. Now myself, trading most of the US session, I had to wait for the break of this candle. Coming in here at 8 a.m. Eastern Standard, or 1200 GMT, I took the break of the high of that candle, which was 54.73. You can see it traveled up here to a high of 55.18 for the day. So minus the spread, we were looking at about 43 pips move there we could have captured. I did enter there, and I grabbed about half of that. I took a 21 pip profit on half my position. I always like to leave half of my position open, which I have open right now, and it's just hovering there. It may get closed out. It's about 7 pips away from closing out at break even. The reason I like to keep half my position open is that's how I catch some of my moves that move for 200 or 300 pips. I always like to try to keep part of my position open and see if I can let it run, especially if I see the possibility of a new trend developing. So I click back down here to a little bit cleaner chart. One of the other indicators I love to use here is a previous day pivot and a floating pivot. Works very well. Previous day pivot showing me yesterday's close. Floating pivot calculating after each bar. So I know when the floating pivot is above yesterday's pivot that I want to be long for the day. I don't want to fight that. It's going to help me find a good entry stay on the right side of the trade. So once I have identified the trend, there's really 2 ways I do like to enter. For instance, the way I entered today on the break of another 4-hour candle going long. Or another one of my most favorite ways to enter is I wait for a pullback to occur, and then so I'll pull back like happened right here, and then I'll enter when we go long again. So we see we have these set of candles here. These are relative strength index candles I use here, and bang, once the relative strength index is turning blue, which is an indicator I use to show that it's going long again, this would have been a potential re-entry point for me right here. I hope that's given you a little bit of insight, and do encourage you to visit my websites, which are clearly listed here right below, and learn for yourself how I use a couple of indicators here. I don't use too many, never want to be too cluttered. How these help me pinpoint entries, and why you always want to know the daily range, what's going on with the daily range. So this is a nice daily range calculator I use here that updates everything for me in real time and saves me a lot of time. So that wraps it up. Good luck, traders, and I encourage you to come visit me online.